All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic weekend. Market had a few things to chew on here this weekend, but not a lot. It's one of those where the stuff that the market had to chew on this weekend was mostly promises of things or speculation of things rather than actual things happening. We started last night with the People's Bank of China basically coming out with some changes that would make it easier for to get lower lending rates or lower borrowing rates. We'll see how that kind of plays out and if they're able to actually pull that off. Kind of a stimulus type of measure. In fact, that's what many are calling it out there. Again, it's not one that is an instant, type of game changer. We've had U.S. President Trump talk about a 10% tax cut to some of the middle income earners here in the U.S. That's again talk, right? That was something that was in his campaign when he ran for president, and still hasn't been enacted. But talked about it this weekend, and then we had Germany last night basically come out and say that they were preparing a stimulus package in case that we were to see further economic contraction. So we have three big parties out there, Germany, China, the U.S. Essentially coming out and saying, hey, you know what, if things get bad, we're going to step in. That helped to push S&P futures up a little bit, helped them to push a little bit higher. You can see here overnight, we didn't have heavy volatility overnight, right? We had kind of the initial 10-point pop in futures right here in the middle of my screen, and then futures, fairly quiet. Pretty subdued. Then we get into just before the European Open, we get the People's Bank of China news that helps to push things higher. Europe opens and Germany talks, and we get the next wave. And you kind of see where things are right now, with all of that. So just, a little bit of 1% uptick here in the market this morning. And one that, yes, is bullish. Yes, is absolutely bullish. It's also one where, we're talking about a Monday morning. Rarely do we see anything game-changing on a Monday morning. And I don't think we're talking about anything, uber game-changing. I do think we're talking about, a little bit of build off of Friday. And then, when it comes to this week, we don't have a lot, on tap. And so it's going to be something where, this week's action is going to be driven by, some of the talk that comes out. And, the Fed here on Friday when we have Jerome Powell, the Fed chair, speaking in Jackson Hole, Wyoming. So that's what the, markets have in store for the week here. And, I do expect that, it's a week where we have quite a few more challenge signals pop up. That's my suspicion, but hey, we'll see how that kind of plays out. I've talked about, hey, for an all clear signal for the market, right? This kind of elusive, doesn't exist all clear signal that everybody looks for, right? Everybody wants an all clear for the bull. Bulls always want an all clear, bears always want an all clear, but there's never an all clear signal, right? But if you're looking for something like that, the closest you're going to get is perhaps the bullish percent index. And seeing, hey, you know what? If the market does have an update, is the bullish percent index rising? And if it is, chances are there's going to be more upside follow through. Again, not a guarantee or anything like that. You can see what the bullish percent index has done in the last 2 days. Not very impressive. But that's kind of where things sit. Right now with it. Okay. All right. So those are the three bullish promises and some of the macro that's kind of going on here in the market. Now, for the challenge, we have two positions on the board, and we have a boatload of 3-7 crossovers. So let's go take a look here. Let's start with Visa and Micron, and let's fill in the pricing here on them. Micron is 281, Visa 375. So let's fill those in here. 375 and 281. And you'll say, well, wait a minute, this looks a little funny. Micron or Visa is down, but the stock is higher, right? We entered when the stock was 178.13, and right now the stock is, let's see, it's at 178.68. And we're down on the position. What gives, right? Well, this comes down to a concept when it comes to options that is probably the least understood concept, and that is Vega, or the implied volatility element. And so we'll go back and we'll take a closer look at Visa in that regard. But when it comes to the challenge, it doesn't matter. Neither are at their profit targets, neither at their exit targets, or the auto exit dates here. So running here with both positions would be nice to see them push up into the runs that the signal suggests they're about to go on, and stack some nice gains on here. We do have plenty of cash for another position. Now, speaking of other positions, if we come in and we do a scan of just the 3-7 crossovers, and let me pull it up here. These are just the stocks on the watch list that have the 3-day moving average crossing about the 7-day moving average. You'll notice we have, 5, 6, 7, 8, 9, 10 here, so 9 if we take out the SPY. That's a lot of upside crossovers that are happening. None of these are signals here as they sit this morning. They're all, the consolidation risk is too high. Some of these don't even have a chance to signal. Something like an Intel, doesn't even have a chance to signal if you look at kind of where it is, where it's trading at relative to its range. It's back down here on the Stowe 39.1. It's at the low side of its last 2-month range. We're not going to get a bullish signal on that type of a move. But things like a Honeywell, like a J&J, we do have some potential, for a signal here with them. Amazon, some potential. We'll see kind of how things are at the close of the day. But you'll notice, even Amazon, down here, below 20 on the 39.1 stochastics. And typically we're not going to get a bull signal when we see that. It's not impossible. It's not, unheard of. It is something that we've even seen this challenge, getting a bull signal with the Stoke 39.1 down here. But it's going to be difficult and, unusual, to get, and will not happen all that often. Okay, so those are the 3-7 crossovers. Quite a few of them. I think the last time we saw this many crossovers come into the challenge in a 2-day period was back here at the beginning of June. And, if you'll recall this time period, we didn't get a lot of signals right here, right? We didn't get a ton of signals because things were coming off of lows, but we did get enough signals to, trade the challenge and to, do very well with the challenge on this, move up. Are we going to see a similar type of move here? No, we could, right? We could, but, it's one where, from a challenge standpoint, I don't really much care about the overall market. Whatever the signals are, we'll jump and run with them and trade them. It's one of those where my personal preference or bias or anything like that just doesn't come into play. It doesn't really matter there with that, and we've discussed that at length here. Okay. All right, so let's go back to Visa, right? We're in Visa, and, we've seen this happen on several trades this challenge, right? And Visa's probably not red anymore. Okay. But Visa, profit and loss on the day for the option for Visa. Our gain loss today is 0. The stock's up 88 cents. What gives? right? What gives? This isn't fun, right? We have a call position, the stock's going up, and yeah, we're not making any money. In fact, we're now down $20. This is not what we get into calls for, right? This comes down to the implied volatility in what is referred to as Vega. Now, Vega is one of the variables in the Black-Scholes model. What do I mean by that, right? Well, Black-Scholes model is basically how options are calculated, or how option pricing is calculated. And it's one where they take observable variables, and I'm just trying to bring up a notepad here to write on. Let's see if I can pull it up here. Yeah, it's not wanting to come on up here. Let's try this one here. But we have these variables, right? And, we know stock price matters. We know that, hey, when a stock goes up, the option value tends to go up if you're in the call, and vice versa in the put. And that's pretty, that's pretty basic, and, nothing too dramatic here. And let's see. They want me to... Yeah, they're giving me the difficult side. So I'm just going to jump over here to the spreadsheet. So we have an option, right? The option price, okay? Option price is going to be equal to, a couple things, or a few variables, depending on a few variables. One of those is the stock price, right? We can observe that. We can see what the stock price is. That's pretty easy. The other is going to be time. We know how much time the option has. That's pretty easy to see. So we can understand our time decay, right? We also have dividends, right? We have dividends that come into this. We saw this when we traded, Microsoft went ex-dividend, but didn't affect the option price because it was already priced in. And then we have interest rates, which don't change very often, but they are priced into options. So, when an interest rate changes, it does affect the options to a very, very nominal degree. And so most people, they don't even care about the dividends and interest rate, just doesn't matter. But if we take these four factors, stock price, time, dividends, interest rate, they don't all add up to equal the option price. We're missing something here. And so option players call it implied volatility. Now, why do they call it implied volatility? Well, they call it implied volatility because they can't measure it. You can't go out and just pull that number from something. Where do you have to find it? Well, you have to find it with the option price. You have to rearrange your equation here and say, look, the option price, the option price minus the stock, the stock, time, dividend and interest rates, right, is equal to implied volatility. So it's called implied because we're having to imply that number based on, everything we can observe. Now, implied volatility has a tendency. It tends to go up when a stock price goes down. It tends to go down when a stock price goes up. Why? Well, because when a stock goes down, there tends to be more volatility. There tends to be more fear of how much something can move. When a stock goes up, it tends not to move to the same degree, right? We can see this in, in a stock price, right? We can come into something like Visa, and we can see the average true range. This is how much the stock is moving on a given time period. We can see the average true range tends to fall when the stock price goes up. The average true range tends to rise when the stock price goes down or finds some more volatility, right? Through this period, October to January last year, stock fell. Had big up days, big down days, but the average true range, the amount that stock could move, was significantly greater. And so the option prices are going to be more expensive. So one of the challenges that call traders have is that if they're going to step in and buy a dip, right? They're going to step in and let's face it, that's what we've done. I know we didn't get a bottom and anything like that, but we're stepping in and buying when the volatility right now is significantly higher than what it was in June, higher than it was in March. And so what does that mean about our option value? Well, option value is going to be more expensive. And on any broker, you're going to see this implied volatility number, off to the side. Here on Thinkorswim, we could see it over here for this month. It's about 23%. Okay, well, what does that mean? About 23%. What's the long and short of that? Well, 23%, simply means that, hey, if we're not talking about something that's incredibly volatile or incredibly expensive. We're talking about something that is relatively low. Something in the 20s is typically very, very low. If we compare this to Micron, it has a 44 implied volatility, right? Now, some text and some traders will say, well, you want implied volatilities at certain numbers. I don't subscribe to it. I don't believe in it. I think it's an absolute oversimplification and nonsense and meaningless. I don't buy it at all, right? But what I do buy is the fact that it matters, right? Because when we take a look at a Visa, right, implied volatility last week was 24. Today is 23. What's the implication there? Well, the implication is that we are going to lose a Vega point, right? We go from 23 to 22, we lose a Vega point. We go from 22 to 21, we lose a Vega point. What's our Vega? Well, our Vega is how much our option value is going to change per point movement in the implied volatility. So, if the implied volatility goes against us, it's going to hurt our option by 21 cents per Vega point. That's what we see happening today, right? That's what we see, right? Our option value, our delta, right? Now that the stock's up $1, right? Our delta here is 49 cents. So we should be making about 50 cents on our option value. But we're not. We're losing about 2 Vega points here. We're losing about 40 cents due to implied volatility. This is what happens when stocks go up, right? We tend to lose on the Vega side and gain on the delta side. When the delta move is very small, or the move in the stock price is very small, you can really see the effects of that implied volatility. And a lot of option traders, they call it time decay, but it's not. It's not time decay, right? Time decay is that consistent that you lose each and every day. And when it comes to Visa here, if we come in and we put on the time decay, the theta, you can see it's 7 cents. So we're losing 7 cents from time decay. We're losing 20 cents from implied volatility, plus another 20 cents from implied volatility. And that's taking away from our delta. And it's creating an option value that really isn't moving. Now, let's face it, the stock hasn't moved all that much either, right? The stock is up 0.5%. We're not talking about a monster move in the stock here today. And so when you're buying in dips, when you're buying in market periods like this, it's not good enough to just get the stock price movement right. You need it to move. You need it to move in your way, and you need it to move in your way to a sizable degree, right? If we take a look at Visa for the challenge, our profit level, 185.81, right? 185.81 is right up here, right? If we hit 185.81, will Vega matter? No, it won't. The delta will overcome that Vega, right? We have, we will have the right to buy, Visa stock at 180. The stock will be at 185.81, So it'll be worth about $6 to $7, right? We bought it here for $3.85, so it'll be about a double if it hits that price target. But in the short run, if it just oscillates around the current price that it is, we'll see that implied volatility go against us and not have enough delta or price movement in the stock to go our way. We're seeing this happen with a lot of stocks today. Caterpillar, for instance, we're seeing it happen. Honeywell, it's happening, where the option values are not moving what their deltas say they should move, or what we would get from the Black-Scholes model saying, hey, you know what, the stock prices move this, so it should move the option price that. We aren't seeing it. Why? Well, because of implied volatility, and implied volatility, in these cases, moving on down, and that is a risk that call buyers, take on when they buy the dips. Now, does it mean, hey, don't go and buy? No, not at all, right? But it does mean that if all you're looking for is a really small move, it doesn't pay off. It doesn't work. It's not something where you can go out and say, well, I'm going to go buy a monthly call, and I'm going to look for this stock to gap up, 0.5% tomorrow, and then I'm going to take it. Well, good luck. You're not going to get it, right? It's not going to pay off. I mentioned earlier that some traders subscribe to the idea that you look for certain implied volatility percentages here and there. I don't subscribe to it. I don't, it's not in the challenge in any way, shape, or form. It's just a matter of understanding, right? When you look at the implied volatility and you see it, you go, okay, if it goes against me, this is what my risk factor is. And if it goes my way, it will help me. Implied volatility absolutely helped us in the Honeywell trade and absolutely saved us in the Microsoft trade. Microsoft, from a pure delta standpoint, should have probably been down about $1,800. But what happened? The stock went down, the implied volatility went up, and it actually helped our option to kind of hold in there. Right. So there's always two sides to it. It's not something where I will make a trade decision based on the implied volatility, especially with the challenge, right? With the challenge, the expected move in the stock price is enough to overcome, the implied volatility shift or shrug there. But when we see a stock move so little, it's a lot more evident that implied volatility. We're not going to see it as, it's happening in Micron today, but we're not going to see it as, noticeable, right? Why? Because, the delta's kind of overcoming it a little bit. But, let's face it, on Micron, I think we're losing about 15 cents due to implied volatility, here with it. So, with your broker, most brokers will give this delta, gamma, theta, vega, right? And the delta is how much the stock price is going to move per dollar move in the stock, or how much the option price is going to move per dollar move in the stock, right? The theta is time decay, right? So our position has a cost per day of $50, and then the Vega is implied volatility points. And so if you look at Micron, it's up about $1.40, right? Let's just say $1.50 for argument's sake. Our delta is 800. We should be up $1,200 today on this position, right? That's what we should be up, but we're only up $960. We have about a $50 loss due to theta, but our Vega is about 2 points, 3 points against us. And so we're losing that Vega times 3. Buying the upside after a highly volatile market. This happens each and every time. The one we're seeing happen right now is not very big. It just isn't, You take a look at the VIX and you kind of see, okay, it's happening. What we saw back in December into January was huge. It was absolutely monstrous. And this is going to be something that call traders are going to have to deal with, If the market goes back bullish, back to new highs, we see the implied volatility come down to 12, is something the bulls are going to have to deal with. Can you mitigate the effects? Yeah, you can, by getting deeper into the money, by buying more time, or by doing a spread. You can mitigate those effects. But for me, it's never been something that really influences any decisions. It's just one of those things that kind of gives me an understanding that, hey, in the ultra short run on a trade, my a stock going my way, to the upside, I can't really expect my option to perform really, really well. I need my stock to make a couple really good moves for my options to do very well. And let's face it, the way Visa and Micron are both set up and the way they are for the challenge, they go and hit their price targets, right? Yes, we will have lost money due to Vega. The implied volatility will have taken probably $500 to $600 out of our gains, but the gains we'll be sitting with due to the delta or the price of the stock movement will be plenty to offset that, to the point where we go, okay, it was well worth it. But it is something that is something that happens. It's something that we deal with, and we go forward. Okay, but it's also one of those concepts that I know traders struggle with, and we've seen it. We've seen it. We saw it with Chevron. We saw it with who was it? Was it the last Visa trade? I know we've seen it a number of times, this challenge, where that implied volatility element has come in, and where the stock price has been higher, but our option price really hasn't moved. We had one case, and I forget which one it was, where then the next day the option value really moved nicely for us, and another one where we just kind of hit our time stop and had to move on. Maybe it was Bank of America. That might be one of them, where that came into play here. Okay. All right. So hopefully that helps, in terms of understanding that Vega, and for the challenge, going to continue to run here with Visa and Micron. Let's see here. 286. I'm just curious. 286 and 405. I'm just going to update these real quick, since I'm still on video, just to kind of see where it's at. Okay. All right. So we put the challenge gains up to just shy of 12,000. And we have tomorrow will be the 20th of August, so we'll have a month left in the challenge after that. It'd be really nice to have a really strong ending here. I do think the chances of hitting 100,000 have kind of gone by the wayside a little bit with the way that July and August played out, just the incredible amount of chop and lack of signals, especially here in August. So something where it'd be nice. I think we have a good shot of, if we get a few good trades in a row, pushing up into the 25, 35, maybe even 40,000 area. Would be awesome to see as we look to wrap up or deal with the challenge here for this next month. We still have not announced a new challenge start date. This one will end on the 20th of September. We are not going to start a new challenge on the 20th of September or on the 21st. I'll want a little bit of time in between just to kind of message a few things. We're going to tweak a couple small things with the challenge, nothing too major, nothing with the trading algorithm, but a little bit of change with the watch list and a little bit of change with the ATR method there that we will tweak going into the next challenge. Thanks for hopping on. Have yourselves a fantastic day, fantastic week. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.